Hello everyone, welcome to Business Live. Coming up, we will be exploring how the 15% US tariff reversal will affect Ghana's competitiveness of agricultural exports. We are live with an exporter. Also in this bulletin, Bank of Ghana reserves reaches $11 billion as import cover nears 5 months.
Gross reserves, on the other hand, have risen to over $11 billion US dollars, which are equivalent to 4.8 months of imports cover. And these are projected to reach 5 months by the year end.
But is the 4.8 months of import cover sufficient for Ghana's needs? We shall be finding out for you as well. Plus, Securities and Exchange Commission warns the public against unauthorized advertisements on fraudulent investment schemes. We shall be telling you more on that. We've got details of this and more for you. Please stay on. Thanks so much for your company. I am Pius Kojobaka, looking at our stories. The U.S. government has announced that it has lifted a 15% tariff imposed on cocoa and other agricultural products exported from Ghana. And Ghana's Foreign Affairs Minister Samuel Okudzeto-Ablakwa stated that the decision took effect on 13th November following a new executive order from President Trump. More in this report.
According to a social media post from the Minister of Foreign Affairs, the reversal came into effect on November 13, 2025, following President Trump's new executive order. Other agricultural products from Ghana exempted include cashew nut, avocado, banana, mango, orange, lime, plantain, pineapple, guava, coconut, ginger, and assorted pepper. Ghana currently exports on the average 78,000 metric tons cocoa to that country at a spot price of $5,300 per metric ton. Ghana stands to raise additional $60 million each year from Trump's effect in terms of reversal. According to the Minister of Foreign Affairs, Ghana welcomes this positive development from the U.S., which is the world-leading importer of chocolate and cocoa products. He added that Ghana and U.S. will continue to forge a closer, mutual, beneficial understanding and cooperation in the coming days.
And it is important we hear from the exporters on the back of this. Joining us via Zoom is Nicholas Apokera, is the Chief Executive of Trade Aid Africa. Thank you so much, Nicholas, for joining us here on Business Live. And I recall when this tariff ban was imposed, we had this great conversation. Now, how will the tariff reversal affect the competitiveness of Ghana's cocoa and other agricultural exports, you think?
Thank you very much, and good evening to your listeners. I think that this is a significant win for Ghana, and for that matter, the trade relationship between Ghana and the United States of America. This reduction, like you rightly said, is going to lead to about 60 million additional inflow for the Ghanaian economy. This additional inflow is significant in that it will help so our foreign exchange earning and help address our balance of trade issues. But also for we, the exporters, it therefore means that what we send to the US, our importers will not have to, deal with this 15% tariffs. And so that will give them more room to buy from us. And therefore, once they are buying more from us, we can create the jobs and generate the revenue that the economy needs.
And I guess largely it will also lead to increased export volumes and revenues, like you mentioned.
Exactly. That's what I said. So once we are not going to, the importers can buy more from us because they don't have to pay this additional money. And that will be a significant, and once they are not paying, it means that they will not also pass it on to buyers or to consumers. So consumers, in all that is being equal, can buy more of our products. And once they buy more, the importers can also import more from us. So in the long run, it's going to create a situation that we can export more, we can produce more, we can export more, and therefore grow the economy, generate more employment and revenue.
That's fine. So how will exporters like yourself adjust pricing when it comes to strategies in response to this very reversal?
Yeah, so already we were pricing to take care of the 15% tariffs. So, I mean, what we now need to do is to remove that from our price build-up so that our prices now become very competitive, and then they can compete with other countries who are also exporting similar products to the US market. You know, when the 15% came, we had to build our price up by that margin. And that meant that our products became more expensive. And as compared to other countries who were not facing the same tariff increase. So with this good news, we will take away the 15%, and that will reduce our prices, which will then lead to more volumes of sales.
But then again, will the benefits of the reversal of this very tariff be passed on to farmers, or will you really improve exporters' profit margins? Is that something you're looking at?
Yes, it will improve our margins, because you see, that was an additional cost. The 50% was an additional cost to us, which we actually were struggling with, and so now that is not there, that cost is no longer there. So if we were still selling at our old prices, it means that we are going to make extra income. So and that will also help us to pay the producers better. You know, we can pay our pineapple, pickers, we can pay our mango pickers, and other people, others who are involved in those commodity value chains. We can definitely pay them better, and then they can also have a better standard of living.
Nicholas Apokera, Chief Executive of Trade Aid Africa, thank you so much for your time this very moment. Grateful speaking to us here on Business Live. Now, to one other story we are also following up for you. The Bank of Ghana says the country's gross international reserves have surged to over $11 billion, equivalent to 4.8 months of import cover. According to him, the central bank projects reserves to reach the 5-month import cover mark by the end of the year. Development, he believes, will further strengthen Ghana's external position and boost investor confidence. More in this report.
The governor of the Bank of Ghana, Dr. Johnson Isiama, at the opening of the MPC meeting noted the build-up in reserves reflects deliberate policy actions aimed at strengthening the cedi and improving Ghana's balance of payments position.
The cedi has demonstrated resilience in 2025, supported by improved confidence, strong operational reforms in the FX market, and robust trade and reserve inflows. Gross reserves, on the other hand, have risen to over $11 billion, which are equivalent to 4.8 months of imports cover. And these are projected to reach 5 months by the year end. What stands out, colleagues, this quarter is the broad momentum in economic activity. Growth has been stronger and more diversified than anticipated. And I can give you the details. The first half of the year recorded 6.3% GDP growth. This was driven mainly by vibrant expansion in services and agriculture.
Dr. Isiama added that the MPC will continue to monitor economic indicators closely to ensure the momentum is maintained.
At the same time, the global environment remains fragile, and we must remain alert to the risks. Talking about commodity price savings, commodity price swings, geopolitical tensions, and tighter external financial conditions. On the domestic front, pressures around taxes, utilities, and cost of credit continue to weigh on business activity, even amid improved optimism. So for today's deliberations, colleagues, there are 3 areas that deserve our most careful attention. The first one is the pace of disinflation and the real interest rate path. As inflation declines faster than projected, the real interest rates have risen sharply compared to our last meeting.
The ongoing MPC meeting is expected to assess recent economic trends and announce key policy decisions in the coming days.
And just like you heard the governor speak, we want to expand the conversation further. Joining us via Zoom is economist Professor Peter Quartey. Thank you so much, sir, for staying on to speak to us, and good to see you. Now, first off, your thoughts about the governor's assessment of the economy, saying, well, he believes we have decisively turned the corner. Do you agree with him?
Well, I think we have a stable reserves that can cover imports for 4.8 months. This is fairly good. Stability is key. I mean, if you look at inflation, you look at our deficit, etc., I think it's very critical. We need to stabilize, but we also have to gradually begin to accelerate growth. Our growth numbers, in as much as is above the usual average, the African average, I think we need to accelerate growth because there are many poor people. We need to get out of poverty, and therefore, as we stabilize, as we ensure that we create jobs, we need to enhance growth, and by so doing, accelerate our employment processes.
All right, that's fair. So for you, you believe we need to do more when it comes to, job creation, etc. But again, the governor is projecting that inflation will end the year at around 6%. And I don't know what you make of that. Yes, we are seeing the single digits rate.
Yes, we are in the single digits, and lower rate of inflation is certainly acceptable. But we certainly have to work within what we consider as optimal, because some level of inflation is good. If we are not spending, if we are always fixated on reducing inflation as a country, we should be guided by the framework. I think the medium-term target is 8 plus or minus 2%. So that is 6 to 10%. But I believe much lower rate of inflation can hurt growth. And some have predicted that for a developing country, perhaps some level of inflation should be accommodated so that we can create more jobs, we can create more space for employment.
All right. Having listened to the explanations given with respect to, the economy, how far we've come, etc., what are your expectations regarding the policy rate?
Well, I don't think the economy is overheating. I don't expect an increase, an upward adjustment in the policy rate. Inflation has been fairly low. Actually, there's not much overheating in the economy. And I would expect a decline, a reduction in the policy rate, or we stay in the policy rate, but not an upward adjustment. And I say so because interest rates are still high, in as much as inflation is declining, in as much as the policy rate is declining. There is some rigidity in terms of the lending rates on the market is still on the high side, and therefore that is not stimulating credit for the private sector to borrow, invest, grow, and employ more people as one would have expected.
Any threats to the economy going forward, you think?
Well, the threat could be global, more global than domestic, because the commodity prices, we depend on commodity export of raw commodities, cocoa, gold. At the moment, we are enjoying the windfall from gold and cocoa. Should anything happen to gold prices, will be found wanting. So I think the threats are there. The geopolitical tensions are also there. Issues about countries, war, trade, tariffs, countries trying to be more inward than before. And also the credit crunch or squeeze, global financial squeeze. Previously, we could get aid, grants, etc. Now it is quite difficult to get grants. And even on the capital market, we are cut off from the capital market. Now we cannot borrow from the capital market. So there's some squeeze in terms of financing, and that can be a threat. But there are options, opportunities ahead. Domestically, we can raise more money to finance investment, and we should ensure value for money. I believe we can live within our means.
All right. A quick one on this. Is the current import cover of 4.8 months sufficient for Ghana's needs? And what's the ideal level, you think?
Well, ideally, we'll be talking about 3 months or the 3 months import cover. So if we are in 4.8 months, that is fine. But if we can do better, we can do more, that's the better, because at the moment, because of the commodity price issue I raised, gold has really helped us a lot. A lot of central banks are using gold as reserves, and that is helping, the price of gold to go up. Should this reverse, should the demand for gold decline, the price of gold to come down, our export revenue from gold is about 50% of total export earnings, can also challenge our reserve position. So some risk there, but I don't think it's so eminent as we speak.
I'm grateful you could speak to us, Professor Peter Quartey. Always a delight having you on here on Business Live. You're still watching Business Live. Let's pause for a breather. We'll be right back. Hello again, welcome back to Business Live. The Securities and Exchange Commission has raised alarm about the rise in suspected fraudulent investment schemes, also known as money doubling schemes, being advertised on some television channels in the country. According to SEC, these fraudulent schemes are designed to get members of the public to give money for higher returns at little or no risk. I'd like to share with you excerpts of that statement as we have it on our screens by the Securities and Exchange Commission, drawing our attention to the fact that there are some unauthorized advertisements ongoing in the country. And it reads, the Securities and Exchange Commission, Ghana, hereinafter referred to as the SEC, is mandated to regulate and promote the growth and development of an efficient, fair and transparent securities market in which investors and the integrity of the market are protected. It goes on to say the Securities and Exchange Commission wishes to put the general public on notice about the rise in suspected fraudulent investment schemes, also termed money doubling schemes, being advertised on some television channels in the country. And these schemes are fraudulent schemes designed to get members of the public to give money for higher returns at little or no risk. Now, by this notice, the Securities and Exchange Commission hereby informs the public that it has not approved, authorized, or licensed any of the schemes being advertised on these television channels. And SEC therefore draws the attention of the general public to these fraudulent activities and advises the public to be vigilant and to desist from investing in their unlicensed products. It goes on to say, furthermore, the SEC wishes to caution those involved in these nefarious activities, reference to sections 144 clause 1 of the Securities Industry Act as amended and 294 clause 1B of the Companies Act, that it is a criminal offense to engage in public invitations and advertisements on securities-related products and services without a license or recourse to the SEC. So you can get more on that when you log on to myjoyonline.com/business. We have the list of that television stations who are advertising these fraudulent schemes. And that's it for Business Live for today. I am Pius Kojobaka. Thanks so much for your company.